Hello everyone and welcome back to Full Circle Trader. So in this video, I'm going to talk about how to read the charts, how to analyze the market through bar by bar analysis. So all those of you who have just started out trading and not sure how to read the charts, face difficulty in keeping the stop losses, entries and exits, this video is for you. Please watch the entire video and you will understand how to read the chart, how to read the candles, how to read the trend in the market. This video is going to answer all your questions. So this video is going to be really very interesting. So please watch the entire video to get the complete gist of the analysis. So with that, let's just start the analysis. So what we do here is we assume that this is the data that we have available on the chart. We don't know what is there to the left. And we start our analysis right from here. So we can see that there were a couple of bars which were moving in the same direction. And we have the declining 20 MA and rising to flat 50 MA. Now, only this, alignment of moving averages tells us that there might be, prices which were declining and now they are sort of consolidating here. Just by looking at the averages, we can, assume that this might be something which is happening to the left. Now, we have this candle here, which is a selling day. Now, because we do not have enough data on the chart, we don't know what is there to the left. So we don't know why the selling has come, at this location. There could be a strong resistance, or there could be, a price pattern which indicated that a selling should come here. But because what piece of information we have available here, we can see that the selling has increased. And it has increased when the average, the shortest period moving average, which is 20 in this case, is declining. So, after this selling day, we have a follow through days here, and then we have this candle here. So let's just mark this candle. So we have this candle here, which is a very important candle because this is the first candle which has given a closing below the 20 period moving average, right? And 20 period moving average is declining and we have now a flat 50 MA. So this candle here, which has given a closing below the 20 period moving average, tells us that there is more to come to the downside. This also tells us that the selling which increased here is now going to increase further once after this candle, and this is what has happened. So we have follow through of these candles, right? And prices continuously declining, and if you can see each bar, most of them has closed at its low. They open near their high, right? And they closed at its low. Such kind of bars which have very small to no tails at all, they are the powerful bars, and these bars tells us that the momentum in this direction is very strong. Then we have even wider range bar that appeared on the rising to flat 200 MA. Now 200 MA is a long-term MA which indicates the long-term trend here. Now, this is a flat to rising MA. So that means that on a long-term basis, this market is in an uptrend, right? So when a very strong wide range bar appears on the 200 MA, we should have this indication in our mind that something must happen here and we should not blindly go short in the market as we have gone here or here. So, this WRB has appeared on the rising 200 MA, and this is a minus wide range bar, as we call it. Now, why it is a minus WRB? Because always remember, excuse me, when you have, couple of bars in the same direction, a strong momentum in the same direction, and then when you have a wide range bar, that usually ends the move. Always keep this in mind. So we have this WRB that appeared on the rising 200 MA, and it appeared after the multiple bars. This indicates that something is going to happen soon. Prices might consolidate, might not turn from here. Never think, once you have a wide range bar after a couple of bars in the same direction, do not think that the market is going to turn directly or change its course directly. Right, it can consolidate for a very longer period of time, or it might, rest for a day or two, and like this, and again, just start its move in the same direction. That could also happen. But a wide range bar after the couple of bars in the same direction usually halts the prices, usually ends that momentum or slows down the momentum. Keep this in your mind. Let me just clean this up. So what has happened after this minus WRB here? We have consolidation for a few days, and then we have a bar here which took out the low of the support which this consolidation has created, and that makes this bar a very important bar here. Why this bar is important? Because it took out the lows. It was a red bar when it was under the formation, but then eventually buyers stepped in and they closed the buyer above their opening price. That made this bar a green bar. Right now this bar is a turning bar, which indicates that a turn is going to come soon. After this bar, when the next day we have a gap up opening, but we have gap up opening at a location which was below 200 period moving average and near the resistance. Let me just clean this up. So all this topping tail bar where we have upside higher tails, they are the resistance area. They have created a resistance zone below the 200 MA. Although the MA is rising, but a resistance below it has some meaning. So when this gap up has happening, it did not have a very strong kind of impact. And in fact, for next 3 days, we have consolidation. Now, remember, as I just mentioned about the wide range bar, there is another very important key concept, that when you have a strong momentum and then you have a consolidation near the resistance area. So let's assume that there is a previous resistance, prices turn and they came back up to the same resistance area and they start to consolidate here. That is bullish, because that indicates that all this consolidation here means that the sellers who sold the market here again going to sold here, but this selling does not have any impact, and the buyers are consuming all the supply which is coming in, and sooner or later a breakout is going to come, right? And then we have the breakout here. So we have two strong bars after the consolidation which closed at its high. That shows again the power of the buyers, right? And this candle here is closed above all this resistance. So that indicates that now there is more to come, because now we have cleared the first phase of this decline and this resistance here. But because we are still below the declining 20 MA, we should be very careful, because we have a very strong downside movement, right? So this is a phase one kind of accumulation, where the smart money is accumulating the prices. We should wait for a proper structure, a proper breakout, then we should go long in this market. And this kind of price action, consolidating at its low, a new low has been created which did not have a follow through. Then we have strong bars appearing against the resistance. That all indicates that now the smart money is entering into this market. Then you have again very important bar here, and this is very important from the retail traders point of view, because this bar has now given a closing above the 20 MA. So we are now above all the resistance, and now we have given a breakout as well. Now this market is changing its course. It has come above the declining 20 MA, and as and when we came back all the way back up to this resistance area. So see, this is the resistance area. Why this is the resistance? Because this is the location, if you remember, where all this downtrend has started. Remember this bar, this is the bar, and then this closing bar, it is where all this declining was started. And now we are came back up again to this same resistance zone, which means that now we have completely retraced or 100% retraced this down move. Now again, another very important key concept here to be noted: when you have, let's say, a down move, and then when you have an up move which completely retraced back it 100% or more, usually prices do get halt for some time or consolidate for some time, right? So here we have completely retraced this downtrend. We came near to this resistance area, and see what is happening. Prices again try to consolidate. Now this means that all those sellers who sold the market here, now again trying to sold the market here, but instead of prices pulling back or coming back down to their support, they just remained in a range. This range tells us that the buyers are consuming all the supply which is coming in here, and then we have a breakout, a very strong breakout here, which makes this bar a very strong bar, right? Now usually after such a strong move, we have prices again resting for a couple of days. And a very important point to be note here is this was the first leg of the move from the base. And usually when you have, let's say you have a downtrend, then you have a base, and then you have an up move. Usually this up move after a short while have a similar kind of move, which is called a measured move, right? So once this move has appeared, and then we have this range here, right? We have breakout. Keep this in mind that we might have a similar kind of move to the upside, which gave from this base, and see what has happened here. So we have a similar kind of move. This means that we have the measured move, which makes this market super bullish. See the sizes of the candle, right? See the red candles got ignored in between. When you have red bar ignores, which I call RBI, with that indicates that an indication in itself that the market is super bullish and selling is not worth. So in an uptrend, always keep a note of it. In an uptrend, usually the red bars don't get respect, and they got ignored, which we call as a red bar ignored. Right. Now, as I mentioned that, a wide range bar after a couple of bars in the same direction usually ends the move. This is what you have here, right? And see the volume, the spike in the volume. So, two things has happened here. The measured move got complete, and we have a wide range bar, which is a plus or a green wide range bar that appeared after a multiple bars in the same direction. That usually ends the move. So when you see such kind of WRBs after the couple of bars in the same direction, get cautious, get careful that something is going to happen. And see, we have next day a very strong selling day, which makes this bar a very important bar here. Now, why it is important? because although we are in an uptrend, but just see the difference between the prices and the moving average. So this market has got little bit extended, and this is where these averages comes very handy as a very handy tool, and which is why I do not use any other indicator except the moving average and the volume on my chart. So these moving averages, what they do is they speed up your analysis. They helps you to analyze the market, in a very short amount of time, very quickly. So we have, a huge gap now, a huge difference between the prices and the rising moving averages. That indicates that the market has got a little bit extended, and that makes this bar important. But again, as I mentioned here, when you see this kind of wide range bars after the couple of bars, do not assume that market is going to change the course directly. The same thing applies to here as well. What we do is we just get a little bit more careful in our trading. So we have two small or range bound days after this selling day, and then we have a gap down. But this gap down has came to the rising moving average, and if you can see to the left, there is a small shelf of support. This means that we cannot completely rely on this gap down day, because it gap down to support and the rising average, which makes it a strong combination. And the next day, if you can see, we have a green day, right? So prices open, they came down below the support area, and I'm sure when prices came down below support, many people have got into the short trade at this bar, who all got trapped here, right? So this bar got trapped many people, and when it closed it high, now it sets up the expectation that it will definitely have a follow through the upside, because we were already in an uptrend. We have the rising averages as well. But again, the next day, what has happened is prices opened at its high. Can you see this bar here? Just focus on this bar. The prices open, gap up, but they immediately came back down, and it closed more than 80-90% of this green bar, which makes this bar a very important selling day, because now the expectation is changed that the market might go to the downside here, right? And if you can see this bar, it has given a closing below the 20 MA, right? And then we have a couple of days which move down, consolidate, and then you have a whole range of consolidation between two MAs. So on the one side, we have flat to declining 20 MA, and then we have on the other side the rising 50 MA, and the prices was consolidating in between. And let me just show you this picture very clearly. Keep this in mind when you have prices consolidating between two averages. This is the market you need to stay away from. This is a trap market, and it traps both sides, both sellers and buyers, right? So just keep this picture in your mind. Do not get into the trade when you have such kind of consolidation between the averages. Then you have a gap down, and see, the gap down was so strong that it moved below all this support which this consolidation has created, and it moved down below the rising 50 MA as well, right? Now, one thing which we need to keep in our mind is, although this is a very strong gap down, but we still have the rising 50 MA, right? Which means that we are still not in a downtrend, right? When you have a downtrend, what is the definition of a downtrend? The definition of a downtrend is when you have a series of lower highs and lower lows. When you have this kind of downtrend, these moving averages will look like something like this, in which the shortest period 20 MA will be below the 50 period moving average, which is not the case here, which means that you should not rely on this gap down. Here we need more piece of information, we need more data to make some decision whether to which direction to take the trade. And see, from the next day the market has reversed, which means that this gap down was completely ignored, right? It did not have the follow through. Now again, a strong momentum to the upside. And now where we are right now, this is the current market, which is happening right now. After this strong move, we again came back to the prior resistance area, right? What we have, if you remember, we have the same kind of thing here. We have the excuse me, we have the same kind of thing here, and now we have the same kind of consolidation near the resistance area, which means that sooner or later we might again have a breakout in this market, because all those who sold the market here will again try to sell here, right? Remember, we have the selling here, we have the selling here. So this might again happen, and sooner or later we have a breakout, because this consolidation here, right? This consolidation is not moving back. It is not coming back to its lows. In fact, it is just consolidating in a range, and you have a very strong a bottoming tail bar here, this one, which dipped down below all these candles, but it immediately came back up, which means that there are buyers at these locations which are ready to buy the market when prices come here, and that makes again this bottoming tail bar a very strong candle here. So that's about it in this session. I hope you all have got the message. If you have any questions related to this video, please ask in the comment box. If there are other topics or concepts in which you are confused and you want me to make a video on, please do mention that too in the comment box, and I will definitely work on it. So till then, take care and catch you in the next session soon. Bye-bye.